The Parabolic Stop and Reverse (SAR) is a technical indicator designed by J. Wells Wilder to identify potential reversal points in the price of an asset and assist traders in determining optimal entry and exit points. Widely used in trending markets, the Parabolic SAR is particularly helpful for traders who want to stay aligned with the prevailing trend or capture profits during trend reversals. This video explores the primary uses of the Parabolic SAR and how it can be applied effectively in trading strategies. The Parabolic SAR is visually represented on a price chart as a series of dots positioned either above or below the price. When the dots are below the price, it signifies an uptrend, indicating that traders should consider long positions or holding their current bullish trades. Conversely, when the dots are above the price, it indicates a downtrend, suggesting short positions or an exit from long trades. This simple visual representation makes the Parabolic SAR easy to interpret, even for novice traders. One of the primary uses of the Parabolic SAR is trend identification. By observing the position of the dots relative to the price, traders can quickly determine whether the market is in an uptrend or downtrend. For example, during a strong upward trend, the dots will consistently appear below the price, offering confirmation of bullish momentum. This enables traders to stay in the trade and avoid premature exits. Similarly, in a strong downtrend, the dots will remain above the price, allowing traders to hold their short positions confidently. Another key use of the Parabolic SAR is timing exits and reversals. As the name suggests, the indicator signals a potential stop and reverse when the dots switch from below to above the price, or vice versa. This feature helps traders lock in profits and prepare for a potential change in the trend direction. For instance, when the dots transition from below to above the price, it may indicate that the uptrend is losing steam and that a reversal to a downtrend is imminent. By acting on these signals, traders can reduce the risk of holding onto a position during a trend reversal. The Parabolic SAR is also widely used for setting stop-loss levels. Because the indicator calculates potential reversal points based on price and time, it can be a useful guide for placing trailing stop-loss orders. As the trend progresses, traders can move their stop-loss level in line with the position of the Parabolic SAR dots. This method not only protects profits, but also ensures that traders exit the market before a trend reversal erases their gains. However, it is important to note that the Parabolic SAR works best in trending markets and may produce false signals in ranging or choppy conditions. To mitigate this, traders often combine the Parabolic SAR with other technical indicators, such as the moving average or the average directional index, ADX, to confirm the strength of a trend before making decisions. This multi-indicator approach enhances the reliability of the Parabolic SAR and reduces the likelihood of being whipsawed by false signals. The Parabolic SAR is a versatile tool that serves multiple purposes in trading, including trend identification, timing reversals, and setting stop-loss levels. Its ease of use and visual clarity make it a popular choice for traders across all experience levels. When used in conjunction with other indicators and in appropriate market conditions, the Parabolic SAR can significantly enhance a trader's ability to capitalize on trends and manage risks effectively.